This is Sidus Space on the monthly chart, and doesn't the price action, or rather the decline in its price, remind you of a EV startup company price chart? Before we get into the analysis, we're going to look at this article. It is coming from Investor Place. Sidus Space stock skyrockets on AI acquisition news. Pretty much anything AI behind a company is going to move the stock price up. But one has to put things in perspective and say, is that move up warranted? Or is it a shorting opportunity? Let's get into the article. Shares of satellite communication specialist Sidus Space, which operates as a data as a service enterprise, jumped Tuesday. Undergirding sentiment was management's announcement of a buyout of Exo-Space, a provider of an analytics platform that leverages AI and machine learning. Strategically, the deal solidifies Cytus' efforts to move into the growing AI space and expand its offering relating its Earth and space observation services. Exo-Space brings a current revenue stream of commercial and government contracts extending through 2025, as well as a pipeline of potential clients. Notably, the deal should have a positive impact on Cytus' EBITDA. The integration of Exo-Space Edge AI technology with Cytus sensors provides significant value and transformative potential across various domains, the CEO stated. While the announcement is promising for Cytus stock, the underlying enterprise still faces a credibility test. For one, Cytus is extremely cheap in a not so encouraging way. Priced at around 17 cents per share, Cytus stock is extremely speculative. Cytus stock is down 9% this past month and down 83% since the start of the year. According to Guru Focus, they warn about Cytus' deeply negative operating and net margins over the past 12 months, and that a pathway to profitability represents a key challenge for the company. Further, in the second quarter of this year, Cytus posted revenue of only $1.37 million, down 26% from a year ago level. Alright, so let's get into the price chart. So you can see this massive drop in price on the monthly candle. A couple of years ago in December, you had a basing candle and then a leg out. So you have monthly sellers at this $10, $11 level. And depending on how you draw your zone, you could have drew it like that, in which when price came back would have been a nice shorting opportunity. I like to draw my zones like this, where the basing candle, the lower portion of the zone is where the candle, in this case, opens. Let's go down to the weekly chart. Let's put in monthly sellers in case, God forbid, price ever makes it back to this level. Alright, now on the weekly chart, you can see there was some type of news in last June. We saw the price spike from 140-ish to a high of $9 before the downtrend continued. You also had massive resistance here at the $8 level. However, this level served as support, was eventually breached, then closed below back in December of this past year. Now let's go to the daily chart. You had a couple of trend line breaks, which would have been a nice opportunity to short the stock. I see a gap fill opportunity. This wasn't earnings, so not sure what news caused this gap down. So here was the news from the other day when they announced the acquisition of Exo-Space. Price hit the 100-day moving average, and that moving average served as dynamic resistance, and the price sold off. Now today you got, although it's a red candle, you have a buyer stepping in. Question is that gap going to get closed? Or are we going to see all-time lows in the coming days/weeks? If I was a betting man, I would say that price is going to close below 12 cents before the gap is filled at 16 cents. Cytus is a penny stock that you need to stay away from, and the opportunity to short it has passed. Look for another penny stock to short. Thanks for watching. Subscribe, please like the video.